the goal here is that I'd be risking a couple points, right? Like if I could risk 4 points instead of risking 9 points, then I'm happy days, right? But if I'm risking 4 points, I got to go smaller size than what I traded yesterday. So would be looking for an entry here around 5201.25. So great setup here this morning on the ES 3-minute time frame. Got a high vol breakout up and over through the opening range. Saw that kind of price action actually hold, which then confirmed the breakout for me. And then wanted to see a pullback back down towards sort of that 5200 area for a clean entry. So this trade came together almost perfectly here for me. Textbook A+ look, and was able to get about 20 points of total follow through. Maybe just a tad early on my entry here. If I got like that 0.50 lower, then I would be able to get full sizing here and maybe eked out 30 or 40% more on my total P&L. But all in all, very happy with this trade. So I might want to try to get a little bit tighter than a 4.5 point stop, right? That still might be a little bit more than I would like to see here. Right, because yeah. If I can get like three points, that would be great. So I'd probably look around 5,200. Stop loss would have to be 51.96. And an entry price around 5,200. So to stay within my max risk parameters, right, position sizing here would be about 60% of what I did there yesterday, right, or the equivalent of a 2/3 sized play. All right, so this is not a full size trade. Right, a little bit more risk than what we had yesterday. Yesterday, I had 2.5 points of risk. Here, I'm going to have about 4. So I want to keep that risk pretty tight. Okay, watching closely here, team. All right, guys, so I am in. Average price, 5,200. So once I identify my entry location, I'm using limit orders at that price to basically wait. I don't enter in on a feeling. I make my entry binary by having an order placed there. Either hits and fills or it doesn't. There's no room for emotions within that context. Okay, almost time for my first take profit here. There it is, guys. I'm gonna take off a little bit here. I'm gonna close a third of my position. Let's go, guys. Let's go. Okay, next target, right? 5208. Let's go, team. Let's fucking go. So I've got that order all set up here, ready to go. So I scale out using the R system. So in this situation, right, my total risk was 4 points. So I wanted to scale out every 4 points until I was up 2R. Almost green instantly on this entry, right, which feels fantastic. Now we're trying to get to that 2R so we can get some consistent follow through. Come on. No, I move up my stop loss to my entry price once I'm up 2R. So I do that same thing every single time. I move my stop loss after 2R once I have half of my exposure left. Generally, right, if I don't like the price action or if I'm not going to be interested in this price action, I'm not going to let it stop me out so I lose money, right? So if I'm not happy with the way it's pulling back, I'm going to try to close it before I turn net red. Now, I had four points of risk here, Tara. So for me, right, it's 52.08 would be my 2R limit. Right, because my entry price was 5,200, stop loss 51.96. So 1R is 52.04, 2R is 2 times 4, which is 52.08. Man, this thing is bouncy around this 5,200. All right, see if we can go here. 4 more points to that 2R. See if we can get there. It's a 10:05. So we've been in this trade for about 7 minutes, maybe. It's about right. Yeah, about 7 minutes. So pretty good reaction here so far. I haven't really spent any time in the red. So I'd like to get that separation. Otherwise, I'm going to shot clock myself. Just because if we don't get that separation, right, then the fear is basically chopping consolidation until FOMC. I don't have a hard rule there, Tara. right? To a certain extent, I'm willing to basically just trust my plan, right? I'm happy with the initial amount of risk that I took on when I placed that trade, and I've now de-risked since I've taken that decision, right? So if I'm kind of panicking about this P&L, then I'm probably sizing my position too aggressively, where I'm not allowing myself to trust my plan. So yeah, we want to avoid overreacting by being responsible with our position sizing, right? I can't really predict every single variable or every single reaction. So I'm basically allowing myself to size my position so that I can continue to think rationally. If I'm not able to do that, then I'm sizing too aggressive. Okay, 2 points away from that next profit target. Right? If I'm feeling anxiety in the trade or I'm feeling the pressure, like this is not moving the way I want, then I've probably been too aggressive with my sizing, right? Because I should have been able to answer that question before I entered that trade, right? How am I going to feel if this trade goes against me is a position sizing question, not a time question. Okay, 50 ticks away. Sorry, 2 ticks away. We're getting close. I think we have a chance here, guys. All right, there we go. So took a little bit more off there at 52.08. Let's go. And I have a third of my original position left. Let's go, team. Let's go. Who's in this with me? Let's go, Alfred, my man. Love that. Atta boy, Joel. What was your entry price? Ah, beautiful, Michael. Beautiful. See, that's a good decision, right? You got a slightly later entry, but you sized down to account for that extra risk. So love it, love it, love it. And now we're getting big follow through here, guys, right? We have a chance here for 3R in a second. I'm going to say my target's going to be this red line now, right? 52.20-ish. But awesome, awesome day. Nice work, Dayon. Great entry. Yeah, account for that extra risk. Spot on. So well done, guys. Love to see that. Man, I'm going to be trading 4 accounts here soon, team. That's so fun. Oh, I love this game. No, I know you weren't the 20. I got you. That's all good. So I'm about like $1,300 with 600 open. So it's gonna be like a 6 or 7K day, guys. This week is freaking awesome. Nice, Michelle. That run as well? You got a, not quite the same retest setup, but you got a really good follow through. So now, guys, my stop loss is at my entry price, right? Scaled out half of my position, or more than half of my position. Moved to R, so stop loss here is at 5,200. I'll probably go like 5,201. This trade makes sense to everyone? You guys understood my entry logic? How I'm willing to be a little bit more flexible around these opening ranges, right? Does it all make sense to you guys? Beautiful. But yeah, I think, guys, with the stuff we've talked about here so far this week, sort of the foundation we've built off here, I think we have a really, really nice edge that we can take advantage of. And I'm trying to be a little bit outside of my comfort zone to a certain extent by being more pliable with how I'm willing to define strength. So I'm still going to be a strict asshole, but I'm willing to look at basically, we'll call it 3 different variations, right, of what a breakout can look for or behave like. And I think that's still going to give me, the versions of price action that I want to see still be true to the concepts I believe in. But yeah, that worked out great, guys. That worked out awesome. Yeah, no, absolutely. So what we're looking for here, right, is our general thesis, right, is that we think that we establish range in the market off the open, and then if we can get a breakout away from that range, we think we have a, call it, directional path, right, in the AM. So this morning, right, we were willing to look at breakouts or reversals in this range in either direction, and we wanted to see it occur after a bearish failure. So a bearish failure would be like a fake out, something along those lines, an inability to hold under these lows. And we saw that occur a couple times prior to us then getting a high volume breakout. So we got a breakout through then the opening range. We got separation on increasing outlier volume. And then we got a weak bearish pullback back into those highs. So our base expectation here was that we would anticipate that bulls would defend sort of this area and push us, back up towards maybe that 2R level or kind of like maybe that 52.10 and beyond. My entry price specifically here was based just on the position sizing that I wanted to get. So my stop loss, I set it at 51.96, a couple ticks below whatever this low was, and approximately the low of that 9.51 candle. So I didn't want to have basically 5.5 points of risk, or 5.5 points of risk, because I just wouldn't be able to get the sizing that I wanted on that trade. So I looked for a slightly deeper pullback into then the psychological level. I actually could have gotten a deeper pullback here, which probably would have made me a little bit more money, but this still allowed me to get in at that 5,200 psych level, get 2/3 of my max position size, and have kind of enough ammo where I could scale out as this thing was increasing. And then as we were making higher highs, right, I was looking to basically scale out every 4 points. So my risk total on this trade was 4 points from 5,200 right towards 52.96. So first profit target was 52.04, which we hit almost immediately after our entry. And then we had to wait a little bit longer for that next profit target at 52.08. At that point, right, I pushed my stop loss up here towards 52.01. And we're looking for now basically see if that lottery ticket can give us all day follow through. Does that make sense? So to summarize, right, this 951 is our setup candle, right? This breakout through the range. This breakout and separation on increasing volume is our confirmation. And then this weak pullback was sort of our execution trigger to take advantage of the move. So setup candle, kind of like that. Nope. No, I don't use the fib to find my entry price. My entry price is a pullback into the range, right? So in this context, my entry price was based on the amount of risk that I was willing to take. I wasn't willing to take on 5.5 points of risk because I couldn't get the sizing that I wanted. So I wanted to size down and waited for a deeper pullback so that I could have 4 points of risk. Right? In theory, your entry price should be a retest of the opening high, so 52.0125, right? And your stop loss is that midline. So that's why I said looking for an opening range breakout or breakout off of 52.0125 in the Discord, because that's the high of the opening range. So anything under that high and to that midline is a good enough or appropriate risk reward ratio. By essentially having that risk, right, you know that you're getting 4-to-1 to that red line because that red line is double the range, right? Double the opening range. So if you have the risk of that opening range, you're getting a 4R or 4R risk, right, towards the upper profit target. So I don't need to think about the Fibonacci's to give me that risk reward ratio. It's already kind of visualized there for me. And then the way, guys, that I determined my position sizing, right, was I literally ticked the stop loss number inside the whatever trading interface. I don't know what to call it, but inside the trading view interface, and I set my price 5,200, stop loss 5,296, and then played around with the units toggle until I was getting less than $1,500 risk per account. And in that context, right, for me, that was 6 contracts. And $1,500 risk, right, is what I'm willing to take per trade. So my max trailing drawdown, right, on this 250K account is 6,500. So the max that I want to take per trade, or the max I'm willing to lose per trade, is a fifth of that approximately. So like I said, guys, next target here is going to be 52.20, and that'll be my out for the day. Yeah, not to rehash old wounds here a little bit, but March is my least favorite month to trade. Every year I tell myself I'm going to take it off and just go spend some time in the sunshine, and I never do, and I always drain my mental capital. So it is so nice to be done with March and seeing beautiful price action again in April. Like, we built this strategy out, right? We spent the entire month of March building it out so we could get kind of that opportunity a day in it. And then it stopped moving and we got frustrated and annoyed and all this kind of stuff. And so it's really nice not to have to deal with that shit again. Gosh. But yeah, guys, we're back in business. I freaking love trading. Honestly, guys, I haven't been smiling this much trading for a really long time. Feels so good. I have missed trading position sizing like this. Oh man, it is so much more fun. Well, in these simulated accounts, I don't know how that works. It's going to be probably, well, fundamentally, guys, right? No matter how much fun Apex is, how much fun it is to trade with these prop accounts, your goal should be to use the money you take from prop firms, right, to fund a personal account. Always. Okay, so a couple points away, guys, right? Like I said, final profit target is going to be 52.20. Well, your biggest risk, SSB, right, is that A, they either deny a payout, the prop firm goes under, etc., right? The money isn't real until the money is in your bank account. So I think prop firms are great for traders because they help you diversify your income source. But I think if you're self-employed and you're like only reliant on one thing, then you make it really easy for that money train to go away. So to a certain extent, right, I can lose, if I lose access to say my 4 accounts or my 3 accounts or however many I have in a couple months, well, all of a sudden, there goes my P&L potential from being able to make 5, 10, 15K a week, right? So I want to hedge myself against that happening, right? So yeah, the sooner I can be 100% reliant on my own capital and I can raise that capital without having to dip into my savings, the better off I'm going to be and the less bullshit I have to deal with, right? Like when you're paying yourself, Interactive Brokers doesn't restrict how much you can pull out, right? It doesn't tell you that it couldn't honor your P&L. So at some point, right, you want to get off of that ecosystem, right? And be trading your own capital, 100%. Like I think something like an Apex, right? You will have an opportunity to, I don't know if you, like I would not be surprised to see someone here pull out $1 million from them. Absolutely, right? I think it's totally doable. But yeah, like I always think that as a trader, you want to plan for the worst, hope for the best. You know what I mean? And honestly, it's going to be dependent on everyone's goals too, right? For full disclosure, I didn't say it was a specific level, Malik. It was more that was just an appropriate risk spot for me, right? So it was just the spot where I was willing to take on a significant amount of risk. At 51.20 or 52.01.50, I just couldn't get the position sizing that I wanted to get. So by waiting for a pullback towards 5200, I could then get the position sizing I wanted. If anything, if you want to call it something, right? Generally, prices with round numbers, like a 5200, a 5100, a 5000, a 5220. Yesterday we looked for 5110. When we get those kind of prices, they tend to be, numbers that have zeros tend to behave like psychological levels. So, like when I do my prep, that's why I love using round numbers. I tend to just round up to what I assume is to be like the psych level. I'm not sure if that answers your question. Yeah, so honestly, the logic behind my point was if I'm buying at 52.01.25, right? And my stop loss is 52.96, then I need to buy 3 contracts to basically stay within my max loss number. But to be very honest with you, 3 contracts is not really worth my time, right? So I couldn't get the position sizing I wanted at that price. So I work backwards to where it's like that pullback where I'm happy with my position sizing. Right? So my goal is that every trade I take is to lose $1,500 or less, right, per account. So the amount of contracts I can buy to lose 1,500 at 52.01.25 is just a lot less than the amount of contracts I can buy at 5,200. So I'm always going to default to buying a deeper pullback so I can get bigger position sizing. Because if I'm wrong, I still lose the same amount, but if I'm right, I now make 30% more. The way that you maybe want to think about that here is have like a min position size number. So if you go into the Discord here, into the trading docs, and then you go into, yeah, no, if I have a lottery ticket on here, Joshua, I've got no reason to close this. So I'm not going to close it if I have just kind of like an arbitrary time frame, right? I won't open new positions after 11 because historically you tend to not get enough follow through. But everything else I'm willing to go. So here, Malik, inside the opening range breakout strategy, I have kind of a rough position sizing guide over how many contracts I'd like to buy depending on the stop loss in points. So if I find my stop loss, I'm not really interested in taking these, right? It's too much. I don't like how I behave when I have that much risk on. It's too much of a pullback. So for me, right, I'm willing to take trades when I have a fixed stop of 4, 3, 2, or 1 points or less. So I'm thinking from that perspective. Does that make sense? So 2 points away here, guys. 1.5 away. I think we're going to hit it. So the question, right, is just go into your trading view paper trader, right, and start playing around with setting a hard stop loss and seeing how much your P&L changes. Let's go, Alfred. And there we go, guys. I am all out. Let's go. Woo! What a day. So closed my final 2 contracts there at that 52.20. Had an order hanging and waiting for that to occur. Absolutely crushed it, right? So closed 2 contracts at 52.04, 52.08, and 52.20 for about a net 10-point win, or about 2.5 R of my initial position. So great trade, stoked with that. Like my goal always, right?